Hey everyone, is everyone able to hear me? Testing, testing. Right, nice. Hey Diana, nice to see you tuning in nice and early. Right, can hear and can see me? That is great. That is great. All right, can see our usual bunch of people: Ajay, Ellen, Bob. Right, nice to see you guys around. Pedro, yes, nice to see you too. Nice to see you too. No video. Are you sure you guys are you guys able to see my video? You should be able to see my video. Both my oh yeah, I have not shared my very good point. I have not shared my monitor, I think. Yeah. Are you guys able to see the video now? Yeah, it's a nice shirt. You know, I gave Superdry a chance to sponsor me. Yeah, but they but after 1.5 years of that, they figured that it's about time I change up my shirt a bit. Yeah. Yeah, it's a nice shirt. It's a nice shirt. Right. You guys can see the video. Yamilu, nice to see you. Carl, nice to see you. Marcia, nice to see you too. Right. Okay. Can't see me yet. Hey, that's weird. Disable, and I'm going to re-enable them. Okay, can you guys see the screen and can see the webcam? Okay, cool. Good stuff. I see works. Okay, good stuff, right? Can see what Bob. Everyone's saying that they can see the webcam, so you might need to rejoin, right? But yeah, you should be able to see it without any difficulties. Is there anyone who is joining us for the first time? Right? Is there anyone who's joining us for the first time over here? Let me see. I got this guy called Marios here, right? Marcia, yeah, are you sure it's your first time? Yeah, it's okay. I can see a couple of new names over here. Good stuff. All right. Today's webinar is on the turtle trading strategy, right? It was made famous in the past with this thing called the turtle traders. Okay. Today we have a very special it's not a guest, right? You've seen him before. Right? It's Yongjin, right? He'll be taking you through the turtle trading strategy, but at the same time, he'll be giving his own spin on it because I feel like the turtle trading strategy is kind of outdated, right? It's kind of outdated. It's not as effective as it used to be, right? Oh, Bob, nice to see you. Yeah. Yes, the same one who introduced Wyckoff, right? I know you guys love it. So he'll actually be trying to introduce a blend of both the total trading strategy, smart money concepts, I think it's market imbalance, Wyckoff, kind of put it all together, right? So you can improve on the original trading strategy. All right, so it's a pretty exciting one, right? I'm glad you love the Wyckoff strategy very much. Diana, right? You can ask me more questions on it today. Desiree, I can see you here slipping into the room, right, quietly. But of course, I have an alert that sets that goes up over here the moment Desiree comes in. I'm kidding. Nice to see you tune in. All right, Kelvin, I see you there too. Okay. Yeah. So just before I begin, for those of you guys who are here for first time, just want to point you to a couple of links, right? Diana, the challenge, right? Back at break even, right? I have to. So there's a free retest, as long as you're above break even. So that's what I'm going to do. I'm going to let retest again. A couple of really good setups that I've taken, not taken, right? I think the downside is that I don't have enough time to trade. So sometimes let some of the good opportunities go by. But yeah, it's really a lot of good setups. It was one bad trade that really took me out, but I'm still profitable. So no worries there, right? Simon, nice to see you. Arkibong, nice to see you. All right. But yeah, I've been sharing some of the trades in the VIP room, so you can go check it out. Recently, we just took the Aussie Kiwi trade, full take profit on that, right? Yes, a lot of it is the Nike tick. Now, guys, I'm just going to point you to a few places. If you're here for the first time, right, what you want to do is go to the IC Markets webinar. This is the playlist that you want to go to. This is the playlist that you want to go to, right? Go check it out. Go watch all the previous webinars, right? And it help you be a better trader, okay? Especially, you can start all the way from the bottom and work all the way to the top. Tomorrow, right, IC Markets, IC Markets live where is it? I'm going to send you the link here because I keep forgetting to send you guys the link. Upcoming session tomorrow, live trading session with me and Jin. Jin's not going to be around for tomorrow because he got COVID, right? So he's recovering from home. It's probably going to be me taking the whole session. So it'll be fun to see you guys there. Please tune in for tomorrow's session. All right, live trading session. How we have it at IC Markets is Tuesdays we have education session like today. Wednesdays we have the live trading session, right, where we practice what we have learned today. Yeah, he'll get well soon, right? I think Jin, don't worry. I think he's young and healthy. Well, not that young, but he's healthy. Should be able to get well soon. All right. So yeah, these are a few places that you guys should watch out for. I hope to see you in tomorrow's webinar. Right. Disclaimer: I just to let you guys know that everything this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. All right. And of course, the agenda for today, right? A few quick things we're going to touch on, right? Who are the turtle traders? The history about them, right? Some of you guys might have read the book on the turtle traders, their trading strategies. I will let Yongjin touch more on this later, but in a nutshell, right? No pun intended there, right? They were a bunch of traders that were trained by this head honcho, right? Using a particular strategy, right? It's a very, very fixed strategy, right? A lot of people have tried to recreate the strategy, which we're going to go into, what goes in the trading strategy, breaking it down. And what I feel is very important these days, right? What I feel is very important these days is how you can improve on it and can implement it into your own trading strategy, right? Yeah, Milo, I think you meant quick recovery, not a quick recovery, right? But yeah, I'll now pass on the time to Yongjin, who will take over the webinar, right, and do a quick introduction of himself along with the total trading strategy. All right, Yongjin, over to you.
Okay, thank you, Desmond.
All right.
Okay, guys, hello. Hi. Okay, let me adjust the chair first. Hey, nice to see you. Hey, thank you. Okay, let's start. Hi. Okay, let me introduce myself first. Hey, good morning. Hello. Let's make it a fun one today. Okay, nice to see you again. Thank you. Okay, let me introduce myself. My name is Chen Yongjing. And I'm the trade analyst. I'm the trade analyst for Everest Fortune Group, and we are the award-winning research team, and we are also the Technical Analyst Award finalists for Best Forex and Equity Research for 2019, 2020, and 2021. Okay, let's move on. Okay, who were the turtle traders? Okay, I'm sure you guys have read about them. They are Richard Dennis and Bill Eckhart. Well, the turtle is a nickname given to a group of traders who were part of the experiment in 1983. Okay, never heard of this strategy before. Yes, it's a very, very old strategy, but not as old as Wyckoff. Wyckoff is older than that. It's like 100 years old. Okay, let's move on. The experiment was run by them, Richard Dennis and Bill Eckhart. They wanted to test if successful trading could be taught to novices. So they taught the turtles, the traders under them, a trading system that resulted in very positive results. And some traders continue to use their trading system or their own version of it to this very day. So they were testing if successful trading could be taught to novices. This reminds me of a YouTube show called $1 Million Trader. So Jean actually recommended that show to me. So it's a real life show from 10 years ago where a hedge fund manager actually hired a group of traders who got no experience in the markets. So he also wanted to see if people who do not know how to trade can be taught to trade. So you can find the series on YouTube. It's actually free to watch. It's called $1 Million Trader. Okay, this series is actually very, very interesting. I actually watch it on the way to work. You guys can check it out. It's very similar to what they were trying to prove, Richard Dennis and Bill Eckhart. Okay, let's move on. Okay, what was their trading strategy? Okay, their entry, they buy when the price breaks above the 20 or 55-day high and low. So you can set that in the, later I'll show you guys using TradingView. They actually use an indicator called Donchian indicator. Later I'll show you guys. Okay, the stop loss is subjective. Why is it subjective? Everybody got their own trading method. So you know, some of you guys have stop loss above the moving average, or you guys have some sort of zone, some sort of order block or something that you guys use. Okay, risk management, very, very important. I just want to remind you guys to only use 1 to 2% of your account only. For me, I personally only risk 1%. 1% if I'm maybe swinging, taking a longer position, or sometimes when I'm scalping, I take 0.5%. Okay, let's move on. Okay, let me see the chat. Wyckoff is awesome. Thank you very much. Okay. So at the end of their experiment, right, their trading, the turtle trading experiment, it was a very, very huge success. They managed to turn $5,000 into more than $100 million. 5,000 to more than 100 million, which is a lot of money using that method. But the question is, does it still apply today? We will check it out later on the charts. Okay, breaking down their strategy. Okay, for the 22-day setting, the boxes are smaller, it's actually closer. But then if you compare it to the 55-day, it's wider. See, I move it back and forth. Later we can see it live on the charts. Okay, and this is done only on the daily chart. I'll show you guys how to answer. No, it is not Bollinger. Yes, it's very, very similar to Bollinger Band. That was my first impression also. I was looking at it and I was like, hey, this seems very, very familiar. Okay, let's move on. We can improve on their strategy. Okay, moving average. Let's start with the simplest of all. Let's go to TradingView first. Okay, let me exit this slide. Okay, end the show. Discard. Okay, so let's move on to Euro dollar. Give me a moment. Okay, let's turn it on. Let me close all these other indicators. So let's follow step by step. First, we go to indicators. Wait a moment, I adjust the thing so I can see my own face too on the screen. Okay, so we turn on indicators. We type. Wait, let me adjust the mic. Donchian channels. You guys can open your TradingView and we can do it together. We can test it out, test whether this method still works in this current day scenario. So it's Donchian channels. I'll start it. Turn it on. So we have the settings, the rank 20 or 55. So for 20, what is the difference between 20 and 25? So if you are using 20, the rank 20, you will notice it's actually closer to the candles, and it's usually used for short-term trades. So it's not for long-term. Longer term trades, they use the 55 rank. Okay, so let me turn off the moving average first. Let me turn off the sensor. Okay, the 50%. So okay, So how does the turtle strategy work? So on the daily, the moment price closes below the previous low, something like this here, the previous low, they start to sell. So they would have entered a short position right here when it closes and is below the previous low. But then the stop loss, once again, it is very, very subjective. If you guys have a different type of method, you can either set it here, but if you set it here, you would have hit your stop loss before the trend continue downwards. It goes up, hit the stop loss here, and continues going downwards. So without any assistance from other types of indicators, it's actually very, very hard to trade this specific method. So let's say you enter here without the use of any other indicators. Our stop loss all the way to the top, but the risk to reward isn't worth it. It's like, oh, it's not even one, okay, it's one here. But how long did it took? How long did the turtle strategy work? It took, wow, it took 193 days before it had a one-to-one risk to reward. Well, let us improve it. Okay, we can use the moving average. Okay, with the moving average, let's say, okay, let's say this is quite a good example. Let's say we buy here. Price broke at this area, broke the previous high, broke at this area, and then we entered a buy immediately with no prior experience. So we don't know how to trade at all. We just come in, we just follow this set of rules. We just simply buy on the daily, and then we head up. Stop loss maybe, okay, it's just an example for now. Let's say the stop loss, we put it down here. So the price goes up, goes up, goes up. But then we are still a beginner trader, so we do not know how to close. We don't know how to close it, but price comes back down. So we can use this moving average as a gauge, as a possible gauge on when to close out the trade or manage it. So when we see it come here, it can either reflect back up or it can start to come down, like in this scenario. So it's possible if you use moving average, the central area, to possibly manage your trade. Okay, but actually to me personally, this is not a good way to manage it. There are actually better ways to manage it. So let's move back to the PowerPoint slide. Let's see what other ways that we can use to implement this turtle trading strategy. Oh yes, by the way, I forgot to mention, right? The turtle trading strategy, they cannot miss it. They have to follow the rules very, very strictly. So when, let's say the price breaks out here, they cannot miss this opportunity, else missing such an opportunity could affect their profits or loss for the entire year. Because since we are trading on the daily, there's only so much opportunities that we can have. Okay, 365 days, that's fine. Okay, so during the span of a year, let's take it from here to here. There will probably only one possible entry, but it hit stop loss, and another possible entry, you could have backed this area or this area, but if you did not manage it well, same stop loss. And this area, sell. There are only two nice entries for the entire year, since we are trading it on the daily. So you can see this area is 365 days. So during the entire year, there will be two nice, one long and one short, with two possibly hitting the stop loss. Okay, let's clear these charts. Okay, if you guys do have any questions, feel free to ask me in the chat. I'll try my best to answer you. Okay, I think okay, let me check. Okay, moving on. Let's check out the next strategy. We can implement stochastic oscillator to it. So let me add it in. Stochastic. Any of you guys use it? Do let me know in the chats if you guys actually use stochastic with your trading. Do let me know. Okay, so as usual, oh yes, you use it. Do you use it daily? Do you use it on your day-to-day trading? Yes, use stochastic. Nice, nice. Very nice, nice, Desiree. Nice, you're practicing. Okay, H4 and H1. Okay, MACD also. Okay, maybe later we can explore the MACD. We have quite a few strategies that we can implement the turtle strategy with. Okay, so let me set out the settings first, the upper band and the lower band. So maybe just now I was mentioning these areas for the long and this area that hit stop loss. This area, maybe there's a nice shot. This area hit stop loss. This area entered. It was quite a nice one. Okay, let us take a look. So what maybe we can improve on? Let's take a look at this area. Okay, right here. At this very area on the stochastic, okay, your setup is different. 85 overbought and 15 oversold. Yes, there are many ways that we can actually use the stochastic, multiple configurations. How good does this work on the 4-hour? No, actually, for turtle trading strategy, it's a very strict set of rules. They only do it on the daily. So if you want to do it on the 4 hours, 1 hour is at your own risk. Okay, it works for your strategy. Nice, nice. Maybe I can explore it later after this webinar. I'll test it out, the 85 and 15. Okay, look at this area. So this area oversold. We cannot possibly sell on the when it breaks the previous low. So maybe this can be used to aid in your decision on whether to sell. So this area buy, also do take caution, same thing. And this area oversold. What you can do is probably look for a retracement entry. Maybe a retracement entry here. It's a nicer risk to reward. Maybe a retracement when around here. Maybe stop loss above to be safe down here. And okay, so you get a nice 1-to-1, and again, we can use this as a possible indicator on when we should exit our trade. Okay, same thing for the long side, for the buying side. Okay, price has hit, went under. So let's say I actually waited, price goes below, and I entered long, it would still hit my stop loss. Maybe the use of other indicators can possibly increase your risk to reward. I think I have better strategies that I would like to show you guys later on. Okay, stop loss hits. This is not a good one. Let me draw it all out. 1-to-1. Entry, stop loss. All these are the bad and good trades combined. Okay, let us see the shorts. Same thing, we can look for a retracement entry right here, these shorts which I'm talking about. So price went down, is underneath the oversold area, price went up, is in confluence with a possible, let me get a rectangle. So it's possible that we find a retracement entry at whatever block you guys call it. It can be an order block, a point of interest. Many people call it different things. It can be a resistance area. So you can enter it there. Stop loss to be safe, you can be up here, because I know retail traders, I've watched quite a few other live streams on YouTube where they like to call this area, let me get the brush, they like to call this area some kind of clean area for price to continue going up. So to avoid such a situation, stop loss can be set above, even higher, maybe right here, and all the way down. So let's look. So same thing, at this area, you can manage your trade, you can get out, or you can close partial. But how well does this work? Is it possible to watch other previous web from IC? Yes, you can watch it on YouTube under the playlist over here. Just now, I think Desmond has already showed you guys under videos. Let me take a look. Under IC Markets Webinars. You can watch it there. There are quite a few. You can watch. There are many different webinars that we have done in the past. I'm actually very happy to be presenting today, because this is actually my second time on IC Markets presenting. And I would like to thank you guys for the support once again. So let me continue. The next one that we will be implementing is, okay, who has heard about this? SMC. Who has heard about it? Smart money concepts. Have you guys heard about it? Smart money concepts. I use in my daily strategy. You have heard it, but not familiar. Your Wyckoff strategy is super. Okay, it's not that good. Later, I'll show you guys a trade that I've lost just now on euro dollar using Wyckoff. I actually lost a trade. So I'm very open. I don't mind sharing with you guys trades that I've lost. So I lost it earlier on, an hour ago. Okay, only heard about it. Okay, for those who are using or you have heard about it, let me introduce you to smart money concepts. Using SMC is price action only. Yes, it's actually like price action. The composite man, smart money. Nice. You guys know about the composite man. Okay, let me clear this whole chart once again. Okay, let us find an area. Let me clear this stochastic. Okay, price in a downtrend. Price in a downtrend. We can actually have, let me get the rectangle out. So I know for you guys, smart money concepts, you guys like to use something called a breaker block. A breaker block. So it's possible that's your breaker block. So I know for many retail traders, you guys will probably draw your point of interest maybe here, or maybe here. But smart money concept traders, what I find very interesting, they actually draw something called a breaker block. This is something that I've been learning also. Breaker block. I started reading up about smart money concepts earlier this year. I mean, every day is a new learning day. I like to test out everyone's methods. Any new methods? Yes, breakers. Yes, very nice. So, correct me if I'm wrong. They like to draw their breaker right here at the previous area. The previous block that, let me get the brush. Correct me if I'm wrong. So price comes down, and this is the last block that was broken. So price comes back up, test it a few times before it continues back down. So I'm sure for you guys actually don't just enter it directly like that. I don't think you guys are actually trading on the daily charts. I'm sure you guys actually go down to the 1 hour, 30 minutes, 15 minutes. For smart money traders, they like to refine their entries. That's what caught my interest when they talk about refining your entries. So they refine it down. I've even seen some traders, they refined their entry all the way down to the 1 minute, finding all sorts of market imbalance, all these kind of things. The breaker block, they can make it very, very small until somehow, maybe on the 1 minute, it somehow became the point of interest very, very thin. So they have this kind of sniper entries. So they have those kind of very, very nice Instagram style trades. But just to let you know, refining entries, there's a chance that you might possibly miss your trade. Okay, you're still on your learning process and testing. Yes, it's good to test and back test. You can use the replay. I'm sure you are already using that. The replay function, I like to use it on the weekends when I'm free. I have nothing to do. I'll start to use the replay button. Okay, smart money concepts. We can continue moving. Okay, another type of breaker block, possibly it's here. Let me pull it up. Because this is the last area the price went up before it broke structure. Any particular YouTubers whom you do watch for SMC? Yes. I do not mind sharing their channels out. I think it's GFX or Men's FX. I'm not sure if he still has the free wait, let me talk. Not sure if free, because I got a few links my friend actually sends me. So he actually sends me a few of their paid mentorships. So I was actually watching, and I don't think his explanation is as clear. This is paid, but the explanation is not as clear as GFX. So if you guys are interested in smart money, you can watch him. Okay, I'll give him a free shout out. Okay, GFX. Thank you for teaching me smart money concepts. Okay, let's move on. Okay, you rock. Thank you very much. Move on. Okay, have you guys heard about this guy? Have you guys heard about him? His name is Michael, if I'm not wrong. Have you guys heard about him? Have you guys even seen this symbol? I think he's trending this year. Inner circle trader. Okay, this guy is someone, yes, Michael Henderson. Yes, you got the name. Okay, this guy is someone I also do recommend you guys to watch. He has actually released his entire trading series for free. So he has been trading for like, I think around more than 30 years or so. And he's very, very profitable. He's trading mainly on the S&P with fair value gaps. He is the original godfather or the founder, creator of smart money concepts. So the other YouTubers actually, they just dilute, as what he mentioned, they actually dilute what he has taught into very, very simple formats. So they call it smart money concepts. But for him, you can check it out. Everything is free. So what is the ICT fair value gap? Maybe you can implement it here. Let me move out. So right now we are presenting inner circle trader fair value gap, FVG. Let's take a look. Let's take a nice look. So what you can see, what you can see for this. Okay, let me take a look, see how we can implement it better. Okay, I found one. So let's say you saw this area, price went down, touch this area, you're looking for a sell. You wouldn't want to sell now. You don't want to sell yet. You want to wait for price to go back to the fair value gap. What do I mean by fair value gap? So what Michael, who is ICT, what he actually means is he searches for market imbalances area like this. I think I mentioned it previously before during the Wyckoff. How do you treat SMC with high volatility news? Oh, I do not use SMC. I actually do not use SMC. I mainly use Wyckoff and fair value gaps. I actually implement his fair value gaps together with Wyckoff. So take a look at this area. This is the ICT fair value gap. So he's looking at a place where price previously has not tapped into. So look at this area. Look at this area. Previously, let me do a replay. So let's take a look. Previously, you see price actually hit here, tapped into this area, but you want a better entry. So it's possible you can implement how is it good? Is it good to have your own strategy combined with others? You can. It's best to backtest it first. After you backtest over a period of time, maybe the backtesting 5 minutes, 15 minutes charts. That's what I usually do. And I mark everything out. So I mark all the possible good trades, possible loss trades before I even consider trying out on a demo account first. So back to this. So we were talking about the ICT fair value gap. This area, price previously has not tapped into it. So the same thing, we take a look here. There's another fair value gap right here. So let me draw it out with the box so you guys can see it clearer. Okay, sorry, my pronunciation. My bad, guys. Okay, so we have two fair value gaps here. Two fair value gaps. Which one do we take? Same thing. From the daily, you guys will probably go down to the 1 hour, 30 minutes, 15 minutes charts with your 15 minutes charts. I don't think we can go that far back because this is last year, 10 March. So I think if I put 15 minutes now, the trading view will not load all the way back here. That's the limitations of trading view, which I do not like when I'm back testing on the 1 minute. I'm limited to how far back I can test on the 1 minute. So it's possible that price can, where is it? Let me find it. Okay, it's here. It's possible that price can retrace back up, test this area, and go back down. Or we can have price going back up here, test this area, and hit back down. So let's say you're entering here. You do not want to miss the trade. You have fear of missing out. You don't want to miss the trade. So you enter right here, and your stop loss there. Your stop loss, let's say you want to refine your stop loss here. Always remember, you have another fair value gap. You have market imbalance, fair value gap, market imbalance right here. So right here. So what you want to do is your stop loss must be able to cover the next market imbalance, the next candle that caused it. So you can set your stop loss right here. But why am I not setting my stop loss all the way up here? Why am I not setting it all the way up here, but I set it here? Because in this area, the market imbalance, or also known as the fair value gap, has been cleared already. So let me draw it out. Take a look. I will remove the extended box. Take a look. Price has already come in and tapped. So I'll take this area as has already been cleared. Look at this area, has been cleared already. So this area has not been cleared. My stop loss will be at the top of this. So let's do a replay. Let's start the replay. Update once every second. Price comes up, taps, goes in. Now we are, what do you mean by market imbalance? Is there a drop of the price? Okay, I'll explain it again after we do this replay. So price tapped in to the fair value gap, tested the area multiple times before price continue moving downwards. Look how clean it is. Price just tests out the area. It's very, very nice. This is one of the reasons why I implement fair value gap with my trading when I combine it with Wyckoff. Okay, what do you mean by market imbalance? Is that a drop in price? Okay, let me try to phrase it in a way that everyone can understand. Okay, fair value gap is an area. Let me zoom in very, very closely. It's an area such as this. A huge drop in price, you can call it that also, huge drop in price, but what goes down must come back up. So we have this area in between. This is called the market imbalance. So you just cover, you just don't look. What do you think price will always feel imbalance? This is why my entry can be here. This is why my entry can be here to avoid missing out on the trade. So what ICT has taught, so I actually watched his videos. I think I'm already at episode 20. I'm around episode 20. He has like 40 over episodes, quite a lot. Each episode is like an hour. He's teaching for free. So what he has taught so far, what I have personally grabbed from his video is, since there are two market imbalance right here, he usually wants to enter on the first fair value gap, because there is a high possibility that price can actually tap into this area, this fair value gap right here, and head down instead of tapping this area right here. But to prevent our stop loss from getting hit, we must always have our stop loss above the area where there is the market imbalance or the fair value gap. So stop loss at the top. So potentially price might come back up to touch this area. So price came up, touch, and touch it twice. So what other retail methods can we get out from this? Do you guys spot it? What kind of shapes are you looking at right now? What shape is there? Is there any shape that you guys see using the retail methods? What do you guys see over here? You guys see? Yes, double top. Yes, you are right. So it adds confluence to your trade. If you are in a sell, you'll feel more confidence, much more confident on the sell for retail traders who use shapes, double top, double bottom, all these kind of things. So that being said, with my entry right here, stop loss at the top, I could have a nice, let's say I just do a nice 1-to-1. Okay, haven't hit 1-to-1, let me continue. Okay, yes, it's 1-to-1. But how long did it take? How long did it take? This is why I will not personally look to the left. What do we have here? What do we have here? They like, on smart money concepts, they like to call this area as liquidity areas to be cleared. So let us draw. Sell side liquidity. Let us look what happens after price clears this area. It's possible price can retrace back up, or price can clear the next area, next sell side liquidity. Retest back and go down. Let us play. Let us take a look. Okay, as I was saying just now earlier, sorry about that. Why I would not use the turtle trading strategy with the daily charts, because this actually took 19 days, nearly an entire month, nearly 3 weeks just to hit a 1-to-1. During that time, price could already went back up. Price could possibly went back up and hit my stop loss. What I like to do is intraday trading. I do not like to hold trades for days and days, especially weeks, just for one-to-one. Yes, it's too long. This is exactly what the trading, what the turtle trading strategy is. They have a group of traders who do not know anything, who do not know trading at all. So the moment price just goes up like here, they just buy. Yes, it's extremely boring. So yeah, they have a very, very strict rule they have to follow. So they cannot miss out on the trade. So when price goes here, they just buy. They do not wait for retracement. So let's say it hits here, they just buy. Price goes down, they just hold it all the way up with a stop loss in place, of course. It's actually, yeah, I agree, it's very, very boring. It's very long. Okay, let's take a look what might happen. Also, what ICT like to say is when he spots liquidity, he likes to partial. So I was actually watching one of his videos where he took profit on S&P. So when price actually taps on the sell side liquidity, as what he calls it, he likes to take partials here. So he takes partials here at the first sell side liquidity area, and then his next full take profit is right here at the very bottom, this entire swing low. So let's take a look what might happen. I don't remember what is going on in the chart, so let's take a look. I'll speed it up. Okay, so let's say we took partials here already, but price went back up to break even. So you already closed 80% here. 80%. So 20% of your runners would have hit break even. But you guys have forgotten, and I also might have missed out, the daily swap fee. We have to count that in. So instead of having our entry right here, our break even here, by then over the course of, how many days is this? Over the course of 33 days, the 33 days of swap fees has already added up. So by then our break even is already right here. Maybe it's here or maybe it's here. Got to factor that in. So if we break even, we forgot to factor that in, but then price went all the way back up to our entry, we would have lost to the swap fee. ICT likes to look for low-lying fruits in the opposite PD array above. Okay, this is actually quite, I will admit, I haven't watched finish his entire videos, all his videos. I've been watching the basic ones. So the swap is higher depends on your broker. Yes, then leave a runner for the long-term targets. Yes, yes. Wow, you seem to have more knowledge than me about ICT. Okay, I feel very embarrassed right now. I need to go and finish his videos. So long, sleepless nights. Yes, yes. You're just holding the trade 30 days, sleepless nights, don't know when your trade will hit break even, when you should close or take profit. Okay, Marcia Smith. I'm just interested. You have watched finish all ICT videos already? Have you watched finish it? And how long did that take you to learn? I'm only on episode 20. Yes, I watched them all twice. Wow. Very, very good. That's the way. When we do not fully understand, we watch it once more. It's been 4 months. So you actually use it on your day-to-day trading style? Do you use that? Wow, okay. I better start watching it on the weekends when I'm free. Okay, let me clear this entire chart. Yes, we'll start live trading next month. Very, very good. I wish you all the best. Okay, you're still using demo. As long as you are profitable on the demo, just remember the psychology of demo and live account is totally different. Treat it like a system, no emotions. Very, very good. That's good to hear. Okay, Diana, you are still on episode 5. I watched many times to comprehend it well. Very good. I actually do write notes also. I have actually a book. I physically write down notes on the ICT trading style, especially his. 61.8%, where he speaks about that a lot. The Fibonacci, 61.8%. Okay, let's move on. We can move on to the last strategy, which is my personal strategy that I like to use. So, crafting your strategy. Wyckoff, you are right. Look, we have the guy's face right here. Richard Wyckoff. Let's get him in. Let's get him in. Okay, I was actually drawing it out, how I would actually implement it. So, it actually complicates things further. Wyckoff is very, very technical. Honestly, I've tried to explain to some of my friends who actually do trading. They also don't understand, although I try to explain to them what is BC, what is ARST. It's too technical for them. Very, very technical. All this BC, ARST, same thing. It is a schematic that has to be followed very, very strictly. So we have right here the redistribution. So the redistribution schematic is very, 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 very extremely technical and very hard to spot. So I don't trade this actually. So if I'm looking at the 1 minute, 5 minute charts, and then I start to notice that price from the accumulation. So what I want is I want price to, let's say right here, let's say I was waiting for price to continue slowly goes up. But if price start to act this way, start to break some kind of structure, I'll ignore it. I'll think that this is a redistribution, and then I totally leave out this trade until the redistribution is completed. I let the markdown phase to be completed before I search for accumulation. Okay, so right here I have a possible forecast on the Euro Swiss franc. It's just a possible Wyckoff forecast together with the turtle trading method. So I actually spotted out this area. Let me get onto the chart so we can see it clearly. Okay, no, not thank you yet. We still are presenting Euro CHF. So let's take a look on the live charts. So this is just a forecast. Okay, just now I actually drew it on the 20 short term. So it was on the 20, the rank was 20. Okay, so what I noticed, price has already tapped at the top of the channel. So to increase my confluence, I follow according to the Wyckoff schematic. Let me type it out pretty fast. Yes, preliminary supply. I only trade accumulation and distribution. So if it's redistributing or reaccumulating, I just leave it as that. But what I like about reaccumulation, I noticed ICT has been buying on that, the so-called reaccumulation. So I got to start watching his videos so I can better implement and not miss out on trades. Yeah, automatic reaction, STB, secondary test B. So we have the spring test and LPS. So this is just a possible forecast. It's just an idea that I have when I was actually looking through the turtle trading strategy, how I could have implemented it. So I was looking for price to come back down, and look what I have implemented. Mr. ICT Michael, yes, it's the market's imbalance right here that I've implemented. This is what I meant when I actually combine multiple trading methods that can help improve my trade. So what I noticed that ICT has taught me is, back then, before I actually implemented this, before I had the ICT fair value gap, I would have my entry right here. I would mark out this area, smart money concepts, the supply and demand. So I can expect price to maybe head down here. But what I notice every single time, I don't understand why. I don't understand why price didn't hit. So price actually went up, went through, tapped a bit, and then it just flew, and it did not hit my entry. So I did not understand why. I've been thinking why. I don't get it. So after watching through ICT, I actually backtested it. I backtested it over the weekends. So instead of setting my area here to have a better risk to reward, let's say it's here. Let's say I want to take profit, maybe at this, maybe somewhere here at this next resistance. So let's say I want to do it here. Smart money concepts, they want to increase your risk to reward ratio. So this one is a 2.1. But if I use ICT method, I do not miss the trade, but my risk to reward ratio has been significantly reduced. So I enter at the very top of the market imbalance. Let's take a look again. How do I spot it? Take a look at this area. It's the market imbalance. Market imbalance. So with my entry at the top of the fair value gap, my stop loss below the spring of the Wyckoff schematic, and my take profit there, it is being reduced to 1.39, but I can fairly be certain that I do not miss out on the trade. So this is the forecast I'm actually looking at for price to possibly come back down, tap onto the market imbalance before it goes up, break the test area to form the SOS sign of strength. What does sign of SOS mean? Sign of strength. Sign of strength. So it's possible sign of strength goes up, last points of supply before we head up to our take profit area. Okay, let me look at the questions. Hi, started using your Wyckoff strategy, amazing, but still losing quite a lot. Can you please have a second session to dive deeper? It works well. I think I need more tuning. Also, I just heard you say you only implement at certain stage. I've been trained. What? Okay, please rephrase your question on what do you mean at certain stage? Okay, you have been trading Wyckoff schematic. Please have more sessions. Also share some content if possible. Okay, you rock. By the way, best trainer. You explained very well. Appreciate. I do hope to increase to better, presents, to be a better presenter in the long run, and I hope to make the session more enjoyable in the future. So actually, you guys can actually check out. I did release. Let me type out. I did release Wyckoff learning idea on TradingView. So you guys can actually check it out. I did release. It's a very very short one. So if you guys are interested in Wyckoff and you guys cannot find me online, you can search it right here. Let me open profile. Okay, cancel. Let me open a new tab. So you can search under TradingView, under people, to actually find my name. Coach Stongs. Can find it. Okay, this I wanted to change the name to my name, but TradingView don't allow me, and I already paid for TradingView Pro, and I'm not sure why I cannot change the name. So under Doge Stongs, I actually did a free Wyckoff educational series. I did it when I was bored at home. So I did it out of my own free time. I had nothing to do, so I decided to help to teach people like you guys. If you guys are interested, you guys can read up on the educational series that I've actually done. Wyckoff accumulation part 1, and I actually taught it and I explain it. What is it? How I apply it? The schematic. How do we draw? I try to actually write it out as simple as possible. And how do we enter a trade? So next we have the Wyckoff distribution part 2. where I wrote it out. Maybe I'll do a redistribution and reaccumulation. So same thing, I do it, I wrote it out, you guys can read up on it. It's under my personal account called Doge Stonks. You can search it up on TradingView under people. Username is Doge Stonks. Okay. Moving on from this. Can you paste the TradingView link for the Wyckoff learning idea? Sure. I just link my accounts. Don't need to follow. Just read up on it. I will be glad if people read up about it. Okay, you can check out my profile there. Okay, please show us the trade you lost today using Wyckoff. Sure, I do not mind. Best trainer explained very well. Okay, I hope I can speak better, and my pronunciation needs a lot to work on. Okay, what is the best technical, fundamental, or both? Right now, I'm actually learning how to implement fundamental from Jean. So I'm actually learning a lot about fundamental, everything all about how the markets work, how does the employment numbers affect, how does the NFP data affect. So I actually sit beside him in office. So if there are any questions, I'm actually learning from him. So I appreciate him. He's actually teaching me a lot about fundamentals. So I think it's best to implement both technical and fundamentals at the same time. So we have the technical analysis for our entry and fundamental as the fundamental canon. So you have a nice bias, your technical is a long and the fundamental news is in your favor. Together, combined, is the best of both worlds. Your sessions are amazing. You are number one now. Thank you very much. Thank you. Don't say like that later. Don't say that. Good host, present to watch. Can you please thanks those stones for today's webinar? Yes, no problem. Thank you so much, Yongqing. You explained very well, but there are a lot of terminologies and ideas that are new to us. Yes, because when I'm using Wyckoff, it's extremely technical, very technical. Last time when I was trying to memorize how does Wyckoff work, it sounds very crazy. I think I've said it previously in the past stream. In the shower when I'm bathing, I actually recite. Yeah, it sounds very crazy, I know. So I actually recite the Wyckoff schematic. PS, I will say in my head, preliminary supply, selling climax, automatic reaction, secondary test, B, spring, sign of strength, B, test, last point of supply. I'll just close my eye like that and I'll just repeat out in the shower. So until I memorize it at the back of my head for accumulation and distribution. Okay. Okay, we learn a lot from you. Thank you. Great session. Yes, I will still be showing the trade that I lost today using Wyckoff. Yes, but I managed the trade. So if you guys still want to stay around, this session might end a bit later since I'm showing the trade that I lost. Okay, let me take a look. Oh my. Okay, let me hide this. So today I was using Wyckoff. I actually sold it here. I had a trade sold. I sold here. The fair value gap, stop loss above. Wow, I closed the trade too. I actually closed the trade. I managed it and then I closed right here. I wanted to short to the very bottom. Maybe here I'll manage it from here. But why I sold it there? Because of the fair value gap. Standard box rate. How did I draw it out? Let me go on the 1 minute charts. How did I draw it out? I closed it in a loss. This is a losing trade which I took. BC, AR, ST, Uptrust, and UTED. So why did I enter this trade? So what's Wyckoff like? So the schematic, break of market structure, top, and break of market structure, bottom. So the moment this area broke and this area broke, this is actually my mistake. because I was doing my work and then I just set the sell limits when I didn't. This is really my fault. I didn't set it properly, the test and LPS. Okay. So this is actually my mistake that I did not label it out properly before I entered. I told you guys before, I normally wait for the test to complete before price comes back down, clears before I enter the trade. But then at this time I was busy with my work, so it is my fault. It's my fault, no one else's fault. I entered right here, price went up, it went so high up, and then okay, also sorry, somebody came in. I believe you lost due to news as well. We're gonna lot, thank you. Okay, so price went up here. I noticed price went up, and then I was like thinking, can price break below to form the last point of supply? I was thinking it can do that, but price start to turn higher, so higher highs, higher lows, and it went higher. So I was thinking, if price break this area, it's possibly price can continue heading upwards and hit my stop loss. So I managed my trade by setting my stop loss over here. I set my stop loss here. So I lost this trade in I think I lost 0.3% on my account since I'm risking 1%. And yeah, the moment I lost this trade, I'm fine with it. I'll reflect, I'll do my journal as usual. So I'm a very, very open trader, so I'll tell you guys the trades I've lost. So this is a losing trade for me. So since this didn't break yet, if price goes down, if price continues going down, it's possible that this entire schematic might be right as long as price does not break the test. But the moment if price goes back up here, I'll count this entire schematic as invalid. Okay, guys, I think we are short of time. We have some events going on in the office today, so I got to end my session here. Just now somebody came in and told me I overshot my time. Yeah, so we are actually hosting an event right now in the office. I'd like to thank you guys for joining me today. I hope to share more information with you guys in the future. Maybe another Wyckoff webinar, part 2, maybe an advanced Wyckoff webinar. Thank you, new fascinating. See you next time. Thank you, thank you. Thanks, have a good day. Thanks so much. I got to go now. Sorry guys, but I appreciate you guys joining me today. I do hope to be able to present more in the future, and yeah, thank you. Take care, take care. You guys take care. Bye. Have fun, have fun. I will end the stream now. Thank you. Bye. Bye, guys. Do I end this? Pause.